Welcome to the BF Anderson Technical Report for July the 12th. You know, the market is efficient. It's very efficient. This is what I mean by that. Everything, every positive, every negative that you can possibly think of is already factored into the market's price. In other words, if you're worried about the tariffs, it's already baked in the cake. If all the news out there that's known to the public, the market already knows it and it's already discounted it. So what I wanted to do is just kind of look at some comparisons here as to what the market seems to be discounting now. So what I have here is a ratio. This is a ratio of consumer discretionary stocks versus consumer staples. So in other words, we're comparing stocks of companies that the consumer has a choice of doing things, whereas the staples I call the toothpaste stocks, and usually when the economy's bad, things like staples do real well. So if you look at this ratio, and what I have here is a very simple ratio using moving averages. This is the 30-day moving average, 40 and 50-day moving average, and you can see that the consumer discretionary stocks are in an uptrend and doing much better than the staples, which are defensive. So basically we have a very strong job market. In fact, we haven't seen job markets, employment numbers this good since 1953. So you get a strong job market, you have a strong consumer, therefore you have additional discretionary spending. So this looks good. Now if we go back and look at a period where this was the opposite, we had a bad job market and where the toothpaste stocks, and I always say you got to brush your teeth for a job interview because employment is down, unemployment is up. And you can see here this, and I'm doing the same moving averages, but I'm going back to 2007, and you can see where the market started to get into a lot of confusion here, and we basically went into a downtrend, which meant the economy was doing poorly. Now to take it another step, just to look at one other thing. Everybody refers to gold. They look at gold and, people refer to gold and like we're going to have Armageddon, the end of the world thing here. So another ratio here is the Russell 2000, which is the small cap stocks versus gold. Well, this is, as of now, you can see that the small cap stocks are far outperforming gold. Now, if we go back and look at '07, just like we did for the discretionary stocks and the staples, you can see again the confusion, the uncertainty, and gold started to do much better than the small caps. Now this was '07, '08. So this is what a bear market looks like. So in other words, look at the facts, and the facts are that right now we're not seeing that kind of activity. Now, if we look at the Russell 2000 just by itself, now this is the small cap stocks. Now, think about it for a minute. The small cap stocks really haven't done anything for a long time because the economy has been so poor that there's no confidence in the future. So what we're seeing here is the Russell actually hit an all-time new high, and the Dow's not making a new high, and this is all because employment is the strongest since the 1950s. And if you remember the 1950s, we had a 16-year bull market. So this is what we possibly, if you keep an open mind and just take it day by day, the small caps are hitting new highs. It really does look like we're in a 1950s type of bull market. Now let's look at the top five, just to kind of get a feel for the watch list as to what's moving. Again, medical equipment. We're seeing a lot of medical stocks. In fact, this week we're going to add some small cap pharmaceutical and medical stocks to our portfolio. So here's a Biomed, hit an all-time new high, has pulled back, holding above the 50-day moving average. Here's another medical supply company called Dexcom, just hit an all-time new high. This is a tech stock, and it's an interesting company. This is called Turtle Beach. This is a small cap company. They make headphones for gamers. And I was talking to a fella that does a lot of gaming, and he says, when you're doing these games, you might go 12 hours at a time, and so they have to have certain types of equipment that work under those conditions. This is Netflix. We continue to see strength in Netflix. Is just about to break to a new high. The latest report on Netflix is that they're doing very well internationally. Now, the last stock on the list is a company called Wix.com, which is an Israeli company, very similar to the other company we've talked about in the past called Shopify. This is all about internet-related e-commerce, and the stock is in a strong uptrend, a little bit of a pullback, but continues to hold above the 25-day moving average. So in conclusion, what I'm saying is you can listen to the media and you can have opinions, but the market already knows just about everything out there, and so it's already discounted. It's already baked in the cake. Let me know if you have any questions. Thank you very much.